of the week, April 4th, 2017. And hello to Andy.
Hey, Steve.
Right.
Hey, Scott.
Good. Hear you well. All right. Let's begin. Trade of the week. Tuesday. Must be Tuesday, 5 p.m. Eastern. Before we get started, just a reminder that we are not giving out financial advice. We're not RIAs. We're not registered brokers. We are here to demonstrate some really cool technology and some content to you guys to help become better traders in the market. Trade Ideas has been around for almost 15 years now. We don't have any investors. We're private. We've bootstrapped ourselves. And I think the only way you can do something like that is to have a product as good as we have. But that's what we've got. But we still need to remind you guys that we're not financial advisors. So please don't construe anything you hear in here as financial advice. One of the reasons we're growing is the onboard concierge. So many different things to even talk about, but quickly, this is the mock-up of a screenshot of Barry's trading room. We call it the live trading room, where Barry Anderson demonstrates trading his own account using Trade Ideas technology and moderates a room of almost 500 people. And in that room, there's some pretty good traders as well. But every day during market hours, this is kind of the place to be. It's free. You don't even have to be a Trade Ideas subscriber to show up to the Trade Ideas room. Right now is webinar number 2, Tuesday webinar. Each week we've got webinars Monday, Tuesday, and Wednesday. And on those webinars, they're all the same at 5 p.m. Eastern. And each week's a little bit different. We try and mix it up a little bit. Yesterday it was myself and Jamie, and today it's myself and longtime business trading friend partner Andy. Tomorrow will be the CEO Dan and Director of Operations Brad going over some Q&A, and then finishing off the week Thursday. Andy's gonna have some good trading advice in the trading studio. What this is not showing, however, is the ability for everybody who signs up for Trade Ideas on a 1-month minimum. You get a free one-on-one training with any of us. We're backed up about 2 weeks right now, but that's the perfect way to do it. Get you in there, get your hands dirty, create some questions, and then you can have a one-on-one desktop sharing session with us somewhere along the mid-month of your subscription. And that in itself, when people come back and want a second or third one, we do charge them $99. So, the first one's free. So with the discount code Scott's going to give you out at the end here, and the one-on-one training at a $99 value, it's a pretty good way to sample Trade Ideas and get the most out of it, because everybody uses this product in a different way, and the one-on-one sessions really allow us to hone in on what you're looking for and customize it and set you free in the direction with the ideas that you're looking for. So all those things together, we are very active in trying to support the new user for sure. Subscriber growth, again, on the heels of that. Basically, the orange is basically probably up to here now. This slide is a couple of months old, and we have been having a couple of really strong months. Holly is signified right here. This is basically where the AI tool took off. But you can see the growth is enviable, to say the least. We're one of the fastest, if not the fastest, growing companies in fintech right now. Brokerage Plus is something that is for intermediate and advanced traders. Essentially, if you have a interactive brokerage account, we are now connecting to their API, and we have an auto trading service, which essentially takes the best of Trade Ideas alerts and back-tested strategies and automates them using a trading robot on the interactive brokers side. So right now we're currently in beta on that. Still working out some of the bugs, but if anybody's interested, please email info@trade-ideas, or you can get more information here at trade-ideas/beta. But we're happy to explain what's going on with that. In a couple of months, this thing will be turned live as a standalone professional product, or for anybody who wants to use it. But for now, the beta is free for anybody to come in and want to dig around and give us some beta testing. Again, for more information, you can email info@trade-ideas, but this is definitely more of an intermediate, advanced type feature. Now, I know we've got a lot of probably new people in the room based on certainly on the poll that Scott just put out there. And you're probably going to be hearing a lot more about what's happening next week at Trade Ideas, which is our test drive. In the past, we've called it open house, but I think test drive gives a better way of expressing what it is we're doing with the product. And so that's going to be on Monday. We'll have some more information on that. But I bring that up because I think there's a lot of newer users in the room that are looking forward to next week. So as I've got my agenda set up here, we'll do the normal stuff that we go through, look at some of the market recap ideas and give some opinion on what the market's been doing. A Holly recap today, which was basically a lot of noise. The trade of the week, which is what this webinar is actually named after. We'll discuss the trade of the week, which was an ETF, and how we came about it and what its current state is and how to risk manage it. I've got a new filter that I want to explain to you guys. I'll just keep it simple as that and tease it, a new filter to add. And then as we get towards the end here, again, we got some great feedback last week, even from some of the users that have had it for a month or so. And they just wanted to see maybe a little bit more Q&A or content based on basic user functionality and basic features. So we'll finish up today's webinar with some basic feature requests. If you guys have something, just sit on it for now until we get to that bullet point in the agenda. And then maybe time permitting, we'll look at half a dozen charts or so. That's always kind of a fun way to finish off, looking at charts and getting a couple pairs of eyes looking at it. So without further ado, I want to remind you all something, especially the newer traders, because I'll forget if I don't say it at the moment. Yes, there is a couple of items in the chat window. So on your GoToMeeting, you have a toolbar there somewhere with some limited functionality, couple of different sub-menus. On the one sub-menu that says chat, if you click the little triangle, chat window is going to open up. And the first thing that was dropped in there is a YouTube video. This is a YouTube video that Andy and myself decided needed to be done on last Friday. So this is called Starting Trade Ideas from Scratch. It's just over 1 hour. It's just a real simple way for people unboxing trade ideas, starting at the very first screen, and what do I do next? So if you're one of those people that might be finding interest in this new 1 hour getting started video, just click into the chat window there and then bookmark that video and you can watch it later. For those of you who are watching on the YouTube channel, shouldn't be that hard to just go to the YouTube channel and look for March 31st and you'll see this recent video, Starting Trade Ideas from Scratch. So some good basic getting started type stuff. Just wanted to remind everybody in the chat window that that link is available and you can go ahead and pause it. Also, let's see. What do we have? I guess that's it. Okay. All right. Let's go to market recap. All right. Starting with the SPY. Now, I was with Jamie in his webinar yesterday and also last Thursday, and I've had this trend line intact, and it's still showing some interesting things. Obviously, back here, touching these bottoms is where the trend line came from. And then last Monday, a week from yesterday, the horrible gap down in the market where we could have gone one of three ways, just continued to sell off, or we could have done a reversal all the way back up and closed green like we did, or we could have reversed up and then rolled back over and made new fresh lows, and that would have been bearish as well. So 2 out of 3 possibilities after gapping down below through this trend line. 2 out of the 3 scenarios were bearish, and of course this market just once again stick save, slapped the bears and finished on highs. The following day, if I zoom in even more, you can see that trend line held even more on the low end of support that day. And then coming into yesterday, we tried to sell off, which we'll talk a little bit more about. But look at where the sell-off abated. Look at where the buyers jumped right back in. Our handy dandy trend line once again. So this is the most obvious item to me on the trend line with the SPY. We're still in our kind of no range here. When we were above this orange line, we were in breakout territory, but definitely a lower high, and we were starting to lose some steam for sure. So once again, the market was very red yesterday, had a chance to close on lows, and it's just amazing to me how strong the buyers are. I mean, we can almost forget buy the dip. It's almost becoming buy the downtick. I mean, this market, I don't want to say it's not a healthy market, but in a healthy market, we have pullbacks a lot. It's 3 to 6%, and we just don't really see that anymore. It's just a constant spinning of the plates and juicing the next sector that needs a little bit of encouragement and keeping the ball rolling. So what did I see last week? I saw the possibility that we might start thinking about maybe getting short on some things. And then that big bounce all during the week pretty much negated that. But the way we ended the week on this one little candle right here, this first red guy right here, that's our little red guy with a topping tail. That's how we went into the weekend. So we'll just leave it at that, and we'll pick up on that in a moment. But yesterday had every opportunity in the world to sell off. And once again, this market is showing us the underpinnings that the bears have zero traction. This market is owned by the buyers. For whatever reason, you can try and come up with whatever reason you want, but the footprints in the sand are showing us that there is just not a lot of traction. I'm kind of in between, and I'll come back to that, but was there something you wanted to add, Andy? I heard you chomping at the bit a little bit.
Yeah, well, you're right in a sense that the bulls have pretty much been in charge, and they have been for the last 8 years, but nonetheless, if you go back since March 1st, we are making lower highs and lower lows. So
yep.
So the trend obviously in the last 33 calendar days has been a downtrend, and then I think until we get back above that 237 probably in the spiders and actually break that trend that we started back in the March 1st, maybe can right
out there.
Yep. Right about there.
For the most part.
Oh, you get to crosshair zone. But no, it's a pretty decent line
it's
where
close
you
enough.
have it. But yeah, the point is we are making for the last over a month now, we are making lower highs, and so in spite of what happened today and what's happened over the last 7-8 trading days, still the bulls have a lot to prove to push forward and power forward. A lot of work to be done, in other words.
Yeah, I'm actually just answering a question because I couldn't help
No
it.
problem.
The question was, isn't it all about projected earnings in the future? I guess if you're a money manager and that's the only kind of stuff that you basically focus on, I don't trust CEOs, I don't trust CFOs, I don't trust analysts, I don't trust analyst projections. What I trust is the footprints in the sand. That tells us what's really happening. So I'm definitely a technician, 10 times more than I would ever be a fundamentalist. So I don't put stock in, so to speak, why a stock should move higher just because some analyst or some pencil neck on CNBC corporate media says that we like these numbers and we think this is going higher. That doesn't do it for me. I'd rather analyze what's going on. To move on, go ahead.
Well, no, just to add to that, I mean, look at the move we've had over the last 7 or just take 3 or 4 years and look at the GDP growth and look at there's been probably zero earnings growth. It's all projected, and if we don't come out with some pretty good numbers in the future, we're going to be so overvalued. It's going to be insane.
I don't know. Somehow we did this with not having one single year of 3% GDP growth.
Exactly.
But I digress. Okay. Price action says higher. You guys have probably read a lot about active managers throwing in the towel. They just can't make sense of it anymore. It's kind of like markets just kind of become its own animal. So all we can really do is study price action. So this little hitch right here, this little day, it's going to come into play a little bit later when I talk to you about a couple things. Basically, let me just go to the Qs. I mean, the Qs, they are what they are, okay? Amazon, Tesla, Netflix, everybody wants to own them. Apple, they are still leading, and technically they are back above their happy line. If they were back here in the no man's land, I'd be talking about it, but they're not. They're trying to lead this market higher. They haven't done it yet, but they are trying to lead this market higher. And guess who's trying to lead this market lower? Good old IWM, the NASDAQ 2000. It just couldn't get into gear today. Even after yesterday's big sell-off, no recovery at all today. This thing continues to stay range bound. It's almost even putting in kind of an oblong head and shoulders. The Dow, for the most part, is also very similar to what the SPYs are doing. They're back down here in the no man's land. So I think the key is when you start hearing about NASDAQ new highs, that might be a leadership moment that the market is looking at. So that's all I've got to say for the most part on the market right now. I'm not fully bullish. I'm still I'm looking for a reason to be bearish, but I'm being open-minded about it. And that's very important to be open-minded about it. And I'm going to show you in a little bit why I'm still not quite back in the full-on bull charge forward camp. You know, a couple of things like Andy does point out, we do have some lower highs here so far for the month, but I'm going to show you some other things coming up. So that is that for the market recap. That is where we are. Very much, yeah, you could call it an inside day today, somebody was mentioning, but with that giant wick to the downside we had yesterday, we're definitely coiling and we're looking for a reason. Matter of fact, this 15-minute spiders chart, I want you to kind of imprint on this because I'm going to show you something a little bit later. Typically, you know, this type of pattern here on the 15-minute, it's not a bull flag, it's a bear flag. We've got rising lows, kind of like creeping out on the branch of a tree, just waiting for it to possibly snap. So that's in the back of my mind. And then again, another tease, I'm going to show you something else in a little bit, but we'll get to it in a good time. Okay, so next is, what are we doing next? I guess the Holly recap. Well, we've talked a lot about days that are statistically noisy and days that are statistically not noisy. And the AI does not like days that are statistically noisy. And a statistically noisy day might be a day like this, basically where, you know, we barely closed positive. I'll throw a rough marker in there. But back and forth all day long, no real rhyme or reason, no real direction, no real broad-based type of rally. It's just what we had. Actually, I'm looking at that line. I'm going to lower it just a little bit to make the point that the market went green, red, green, red, green, red a few times today. That's what the S&Ps were doing. Now, one of the things we've been noticing on Holly is if there's a day that's not going to generate a whole lot of alpha, which today really didn't, 24 cents on risk off, a lot of times early in the morning we can see some cues that are letting us know that the canary in the coal mine, or Holly, is struggling a bit. And I went ahead and screenshot one of those, and this is what Holly looked like almost going into the 12 o'clock, about 20 minutes or 10 minutes before East Coast lunchtime. 9 o'clock Pacific, 12 o'clock Eastern. You know, they say animals, snakes, spiders, you know, animals, insects that you're to avoid in nature, they all have a funny way of kind of telegraphing their evil badness to you. Well, this is what I would basically call that for Holly. It's kind of a black widow spider, green, red, green, red, green, red. This is 2.5 hours of trading. And so when you see the AI struggling after 2.5 hours of trading, it's pretty much a guarantee. It's not going to shape up to be the kind of day that, you know, we would all hope, unless something changes and some news comes pouring in and a bunch of new trades come in. But for 2.5 hours into the day, this is a garbage histogram. I believe yesterday and Friday were some pretty good days where the histogram starts off green and just slowly just kind of goes up in an upward sloping fashion all day long. And that's the way it was yesterday. And Friday, I think, was also a decent day. But when we see green to red, back to green to red, to green to red, to green to red, this is noise. And so basically the lesson today of Holly was sit on your hands. There wasn't a lot of trades. The trades that she was attempting to make were long trades, and were getting stopped out or sold out very quickly. And so really, I'm not going to go over any single trade that stands out today. There really wasn't very many that stood out today. Because I think the big takeaway and the big picture here is using Holly as the canary in the coal mine, or if you're a California guy like we are, watching from the shoreline as the surfers out there just getting pounded in horrible waves. This was definitely 2.5 hours of beware that the market, or Holly, the AI, is not seeing things clearly. There's a lot of noise, and when I show you the spiders back to green, back to red, back to green, probably one of the reasons. You know, if we had had a quick reversal and we went green and stayed green and just kind of trended all day long, I guarantee you this histogram would look a lot cleaner at the end of the day and a lot better. Anything else you want to add about
No. I mean, he was showing you the risk on profit. The risk off profit did finish up like 24 cents, and but he's right. I mean, there was not a whole lot of alpha generated today. It was he doesn't have the closed positions up there, but if he were to put them up there, just maybe see that she didn't fire off a lot today.
Here's a quick hack, guys. We should have some color coding in there, but we don't. If that ever happens to you, just come up here and do refresh, reset connection, and voila, there you go. It gives us a better heat map. So the greens and the reds kind of just outdid each other. A lot of noise, a lot of back and forth. But again, the big takeaway today is watch that histogram, watch it in the morning, watch it in the first hour and a half, and see if it's trending, see if it's getting some legs under it. This was about as noisy as it gets, so I really felt that I had to screenshot that for you guys to tell the story of what Holly was doing today. All right, let's go to the trade of the week. Got a few things to talk about here. First thing I want to do is bring up the alert that we found it on. It is the pulling back to 20. I give Andy the credit for making pullback above 50 days, so it made all the sense in the world for me to do pullback to the 20-day, and that's exactly what we did on this particular scan, because we were looking for opportunities where there was a major pullback. And so as I expand this chart over the weekend, as we were looking through our trade ideas scans for some oversold pullbacks or some decent entries, SDS was basically right at the top, or the second one on here. And what SDS is, for those of you that don't know, it is the inverse of the SPY. So if I type SPY, that's the exact opposite, a big bounce and then kind of rolling over on our SPY. SDS's big pullback where the bounce was, and now it's starting to bounce back up a little bit. The reason these are created is a lot of people have self-directed IRAs or other accounts that they don't allow them to go short single stocks in. Some accounts don't even allow you to go short, period. But these ETFs were created as a proxy for traders to participate just in a broader sense. If the market gets weak, you're not picking on one stock, you're basically shorting the entire index without shorting it. So what it looked like was a beautiful thing on Friday, basically 1, 2, 3, 4 days, which was the 4 or 5 days of the spiders climbing last week, and then a nice little bounce with a little green candle right here. And as it were, this was resting perfectly on the 20-day moving average. And so it satisfied everything we were looking for here for stocks that had a pullback but are resting and stopping and finding some support, hopefully at a critical level, in this case the 20-day moving average. Well, that's the first thing. That's how we found it. All right, the second thing is we've been calling long trades all year, aside from last week when we went to cash as the volatility started to creep in. And so we're very reluctant to, continue to try and call breakouts, continue to try and call things that don't have a safe entry. So again, we're looking for these type of pullback type entries rather than breakouts. Now, let me just think here. What was my lost my train of thought? So the SDSs are a way in which the general public can participate without having to flip a chart upside down in their head. I talked to some people that, no, I don't like shorting. I just want to read the chart left or right. I want it to go up. I don't want to confuse myself. I want to keep it simple. But I'll tell you what, guys, there's going to be a time and place in this market where you can't just play tennis with a forehand the whole time and stand on the left side of the court. Eventually, you're going to have to learn how to play a backhand. And so, that means learning how to short, obviously. But the easiest entree into that is just using these inverse ETFs. So the third point I want to make here is that, we've been calling out long trades all year. Now, when Andy and I both ran the Ditto Trade mirrored account, we were trading a live account and people attached their account to us with live money. So as we went to go bid something, we were like a 25,000 share block all bidding together with real money and everybody was participating. And that'll start to make you wake up real quick and not be a sloppy trader, knowing that you've got other people tagging along that you've got to be accountable to. And so every now and then when we felt like there just wasn't a whole lot of upside potential and some of our longs were still working, we would consider SDS as a hedge. And a hedge is basically just the inverse, like a hedge fund. They're basically long and short. The shorts are considered a hedge in case the longs go down. So we're kind of introducing to you this week the notion of how you can use these SDSs or any other inverse ETF as a hedge. Maybe you've got a couple longs that are still open, but you're not quite sure what the market's going to do, but you don't want to sell your longs. So one of the options can always be to just come in and use this general vehicle, SDSs, as a hedge. And so there was a bit of a component in that as well, considering that we've been calling long trades pretty much all year. So that was the genesis. This one, pull back to the 20. I'll be happy to share it. I'm sure somebody's probably asking about it. So we're going to copy and share, and I'll drop this into the chat window. So for those of you who have access to that cloud window, you can just right-click it, save that link into your cloud, and then you can have a swing trading type alert. Let's take a look here. This gives us stocks that are basically pulling back but basing at their 20-day moving average. And it, as most top lists are, it requires a lot of work going through. This one looks kind of interesting right here, but nonetheless, it's a decent alert for not trying to chase momentum, because when we chase momentum and we're wrong, you are really wrong. And going back to the sentiment that I've had, I'm not exactly a full-fledged bull right now, and I'm not exactly in the bear camp either, but we're close to figuring, a direction, I feel. Now, did you want to add something?
No, I remember us talking about it over the weekend. I totally agreed with that call. I mean, SDS is not something normally when we do play them, we hold on to for very long. You're looking for a quick move. I thought we may have got it the way yesterday started out, but once again, Lucy and the football and Charlie Brown. But nonetheless, I mean, I think it's still intact, and the reason I say it's not something you want to get into and hold on for weeks and weeks, because there is some
contango or
they're toxic in a sense that they
reset as they reset, they tend to degrade in the wrong direction.
They do. SDSs are not as bad as like the VXX and the doubles and triples, but
or UNG or oil or things like that.
I will definitely do SDSs.
So I'm glad you brought that up. Normally we don't hold these for too long. We like to get our move and then bail. Therefore, if we're wrong, we're going to know pretty quick. If this market wants to go back and take out, and the S&P is right here, they want to go back and take out this high and roughly this level right here, that's pretty much going to be our out for SDSs. And so in this case, buying at 55 and selling at was it 35? I'm sorry, it was 35. 35 is our exit. So we're really only risking 20 cents here to try and make a buck for the most part. So very, very tight, very, very tight exit, very conservative exit, because look at what this market does. It just continues to slap the bears around. You don't want to overstay your welcome if you wind up getting bullish, and you don't want to be pig-headed. You want to be open-minded. So by having a stop this close down here basically says, well, this candle didn't follow through. That's strike one. We went a little bit higher today, but we're still in the range here. Strike two. If this market wants to break back out, this line is going to break quickly, and we've only risked 20 cents. And we're back on the bull train once again. Trying to make an example that if you're going to be pig-headed in this market and sit here and just say, I'm just going to keep adjusting this line, this is bull crap, everything that's going on in Washington, Trump, the Fed, this is not right, the market's wrong, I'm right, that's the kind of stuff that's not going to make you last. So you've got to be able to turn your opinions, open your mind, and be able to pivot on a dime when needing to do so. And I'm going to say that that's 13.35 is going to be our out. So a real tight look, 20 cents on a nice pullback. We had it going yesterday, but this market is just unbelievable. And so if we move higher in the market, it's not going to take much more to stop that out. And that's pretty much what I've got to say about that. Anything else that I didn't touch on?
No, I gave my 2 cents worth. Yeah, no, I think I approve. I approve this message. Yes.
I approve this message.
Yeah.
Okay. All right. Somebody's asking if there's any way they can retrieve some of the alerts that was given out through another webinar, previous webinar. Basically, if you know the names of the scans that you saw, what you could do is you could go back to the Trade Ideas YouTube channel and locate the webinar in question. And then if you've got the names of the scans, just go ahead and send a request to info@trade-ideas.com, and we'll be happy to either drop the scans in the cloud for you or send them back to you so you can do it either way, because I'm not exactly sure which ones you're talking about. All right, so that is the trade of the week. Now let's go back to spiders, and let's talk for a moment why Steve keeps mentioning that he's just not quite out of the woods yet on a hint of bearishness still to come. And we can't see it on this chart, but I'm going to show you. We have a new filter, and the new filter was requested by myself. I would love to take credit for designing it, but I can't. The credit goes to my good friend and very, very good trader, Brian Shannon, who is Alpha Trends in StockTwits, Alpha Trends on Twitter. I think he's got about 80,000 followers. He's got a wonderful education service. Highly recommend it. And I've known him since 2008, and we've talked a lot. And he turned me on to something called, well, he calls it the 5-day moving average. And it's kind of a misnomer because it's not really averaging the days. What it's averaging is a 15-minute candle period. And it just so happens to be, if you take a 15-minute candle and you times it by 130 periods, which is exactly 5 days, if you divide 130 by 6.5 hours, I'm sorry, not 6.5 hours, forgot how many, however many 15-minute candles are in a 5-day is how this works out. So it's basically looking at a 15-minute chart and then using a 130 period. But that just so happens to basically correspond to a very fast moving average called the 5-day moving average. So what I'm going to do is something I don't do often, but I need to illustrate my point here. I'm going to go to my 15-minute chart on spiders. And this pinkish orangish line here is, as you can see, the moving average 130. So on a 15-minute chart, look at what this average did to the price action in the last couple of days. So spiders came down and sold off, and they bounced right at it. They tried to hold a bounce. They tried. They couldn't. They plummeted through it quickly. Yesterday, came back near the close, closed right at or near the 5-day moving average. Sold off again, popped back up again. 5-day moving average, 5-day moving average. Closed almost kissing the 5-day moving average. So what I'm seeing here on a 15-minute candle, back here, everything was honky-dory, everything's good. But in my world and in Brian Shannon's world, he's convinced me that, this is a pretty good binary moving average. If a stock is above the 5-day moving average, it's probably in good shape. If the stock is below the 5-day moving average, it's got a little bit of headwinds. So what I'm seeing here in the spiders is this 15-minute 5-day moving average has been containing the price basically since yesterday, including the support. So what's going to get me a little bit more bullish again? Well, if we trade way above this 5-day average tomorrow and take it out and move higher, then all thoughts of bearishness and market selling off are going to be going away. But for the moment, and yes, it's a simple moving average. And for the moment, this line is pushing down on the head of the price action. So it's basically got its hand on price action. And that's not to say it's going to hold. I don't know if it's going to hold, but it very well could. If we open up down tomorrow and move lower, well, then this price average did its job in showing a pretty good level. So what I've been doing lately is I've got this new filter, the 5-day moving average, is I've been just kind of throwing it in there. If it's a stock that I want to be going short on, and I'll show you how to do it, I'm basically configuring the 5-day moving average to make sure that the price action is below the 5-day moving average. That's going to be something, at least one of the check marks for going short. I'll give you one more example before I take this down. Silver basically has been having a wonderful week, gapping up and then going sideways. What was it waiting for? It was kind of waiting for the hand that guides it higher, which in this case, of course, was the 130. And then we popped again this morning off the 130. So I wanted to just find a couple of quick examples visually so you can see the 5-day moving average can be a really decent rule of thumb The price is doing good if it's above the 5-day moving average and has a shot to move higher. If it's below, it's going to have a little bit of headwinds to get through. And coincidentally enough, a lot of times this 5-day average is kind of close to VWAP. Not too close, but for the most part, it kind of mirrors VWAP a lot. And so let me just show you how I would configure something. So let's say I'm using an alert that I want to go short. Well, in this case, we've got new high, so let's use a new high example. 130 is the search term, the keyword that we use, and it's called the change from the 130 period on a 15-minute chart. Go ahead and grab that, add that filter. So what I would do is I would just say minimum 0.01. So I've just added another layer of a check and balance system to my long trades. If I want to go long, something making a new high, in my world, it better be above this 15-minute 130 period, or the 5-day average, as you call it. Now let's assume that maybe we were going short and this was a new low and we were trying to look for short setups. I'd want to make sure that the price action is at least checked off below the 5-day moving average, and that would be a value of negative 0.1. And what that means is that's the highest value that a stock can be before showing up on the filters. Anything above a flat line or a positive value on a 5-day moving average is not going to show up if we set the filter to this type of setting. So it's just something I wanted to share with you guys. What is VWAP, please? VWAP, the question VWAP, value weighted average price. And it can be on many different time frames. You basically set your time frame and you say, based on volume, value weighted, what's the average price? And so that's what VWAP stands for. Yeah, Don, this can be a great one for day trades. You know, if you're looking for any kind of day trade, I would just want to make sure that this, you know, the stock is above that filter if you're going long. It's just another filter to be used in conjunction with every other filter. I mean, there's 9,000 different ways to use it, but it's something that I've believed in over the years, I've used over the years, and Brian Shannon is a very well-respected trader, and he basically gave me permission to have Trade Ideas build it and tout it as such. So very happy to announce that if you're not aware of it. And it's funny too, because on the live chat, sometimes we'll see people come in to Trade Ideas and say, hey, do you guys have the 5-day moving average? And we say, oh, you mean the one Brian Shannon talks about? They say, yeah, that's the one. Well, yeah, we just built it. So if you're looking for it, it's not under 5-day. It's basically under 130 period, 130 15-minute candles. And that's just kind of a good binary rule of thumb. Is the price above or below? And that's pretty much how I'm using it in my filtering, whether I'm going long or short. All right. Oh, the window I just showed was really nothing there, nothing really magic, David. It was just, you know, starting from scratch. When I start a new window from scratch, but basically it says you want to start with a new high and start with these filters. If you want to start from scratch, you can double click right there, and then you definitely start from scratch. But then you still got to go in and search and find the things you're looking for, like a check mark. Well, what the heck's a check mark? Well, if you don't know, highlight it, click help, and our documentation page will take you right to what a check mark is. We'd like to have that 5-day, would love to have that 5-day scan. Well, basically all it was just something making new highs with a couple of volume filters in there, and then the 130. You know, I'll tell you what, Don, if you want me to create a simple foundational base for you, you know, you can email me and I'll send you back what that was for the most part. Strategies, current settings, recent settings. It might even be in here. Was that it? Yeah, that was probably it right there. Yeah, there it is, changed from the 15. So there's not much going on this scan really at all. So go ahead and email me, Don. I'll be happy to take care of you. So until these spiders, which you guys can now see in a brand new light, that 5-day average, kind of like a little rainbow holding and pressing the price down, is there. And until that works itself out, I'm going to still have an open mind for bearishness. And in addition, this intraday pattern here is basically a bear flag. You know, this is what they would call a bear flag. It's the kind of thing that if you had to guess, put a gun to your head, the next move could be lower. but not every time. We could easily go higher. These are just ideas. So until we get back above that 5-day moving average, I'm still kind of in ambivalent zone as to what direction this market wants to take. All right. So at this point, we've got a few minutes, 10 minutes or so. If somebody's got a question about basic functionality that they would love to know, we'll do our best to demonstrate that for you. And if somebody wants to look at a couple of charts, we can take a maximum of 5 or 6 of those and see what we got. Okay, I will click my email address to you, Don, very simply.
And while he's doing that, and while we're waiting for people to throw out questions, maybe about the features, any questions you may have about our software, I will remind you, if you're going to your trading platform and using your charting there and you're creating a study for the 5-day, remember, it's even though we call it a 5-day, it's a 5-day chart on a 15-minute time frame, which means if you're creating a study, you have to remember you're basically creating it for a 130 moving average for a 15-minute chart. It's very important to do that. If you just go in there and create a 5-day for a 15-minute, that's not doing the trick. You have to actually use the number 130.
Yep. Got to search for that 130. That's the key metric. Okay, any questions on anybody want to look at a chart? Okay, we're getting some questions. Could you look?
Mylan, let's see.
AB and Mylan, is that what he's asking about?
Mm-hmm.
Let me go to my daily chart here. Well, AB, I'm not really seeing a whole lot other than this giant trading range that this thing seems to be in.
Mm-hmm.
For the most part, I'll call that a little test down there, and then create this horizontal line up here. That's pretty much what you're looking at, I think, for AB, and you're basically in no man's land right now, so nothing really special going on there to talk about at the moment. Now, Mylan, this is an old level of support that I had in there for some reason. I would watch and see. Today actually was a great reversal right off of that level. I don't know why I had that in there, but I did. This could be like a 5-day bounce, 1, 2, 3, 4, 5 days down. You could probably put in an alert above the highs of yesterday, like a price alert, something right about there. Could be an interesting price alert for a possible reversal, maybe just a day trade. But this thing has definitely fallen from grace. It could be due for an oversold bounce. All right, thoughts on Fresh? Holly called out 3 days in a row, but was negative today.
She called it out twice in one day.
Yeah. Yes, so this is a great example. I would have said the same thing yesterday, so today even surprises me. Giant topping tail trading all the way up here and then all the way back down typically would make me want to just pull back and wait for a few days for the price action to pull back and build a new base. But wouldn't you know it, it did the same exact candle pattern 2 days in a row, and my answer still would be the same. It's musical chairs up here basically. What I would be looking for is a possible pullback. So here's the big level of breakout. The only thing I see that might be interest would be to create an alert to go long and remind myself it's a pullback. And so if it comes back, when I see pullback pull up on an alert that triggers, first thing you want to do is watch the intraday price action and study it and make sure that you got some buyers in there holding it up at that level. And then that's a possible level for you to consider participating as well. Yeah, good point somebody makes. Mylan had the huge recall on their EpiPen. But, you know, again, it's a great point. You know, taking news, was that known about up here? Do they know about it here? How much of it is priced into the stock? And so, yeah, I agree the news is important, but the footprints in the sand can tell us when the timing might be right to take a chance. And there was definitely support there, a nice attempt at going below support with a big bottoming wick. So it could be enough for a dead cat bounce in there. I'm not saying, you know, hold it for 10 days, but it's pretty oversold, and it could put something in there. So the news is it's interesting, but I pay more attention to what the footprints in the sand are certainly telling us. Okay. best way to use the pre-market data, the gap. Do you look at the 5-minute chart and take potentials based on a 1-minute chart? Well, I can tell you, Elaine, I don't use 1-minute charts. I don't want anything to do with 1-minute charts. Never really have, maybe a long time ago. But the 1-minute chart time And if you're somebody who's inclined to maybe short the open on some of these that gap up 30, 40, 50% and watch them closely, these can be some interesting opposite moves to fade. I don't think I'd be buying a stock that's gapped up 50%. And likewise on the other ones down here, maybe pre-market, you start double clicking into them, taking a look at the levels of interest and seeing what they're doing, and then maybe creating a price alert at something that makes sense for you during the day. But just because they gap up or gap down doesn't really give us any indication of what they're going to do next. Some of them might continue and some of them might reverse and come back the other direction. Do you have any thoughts on how to use that pre-market?
Yeah, I do. First of all, I'm always looking at daily charts, and if they're kind of in no man's land, like that CBIO and all that was actually a one gapping down. But I look at the daily chart for patterns of where it may be breaking out, whether a 5-day, 10-day, 20-day high, and then I also like if I'm talking about stocks gapping up. I'll look at the daily chart first to see where they are. Are they potentially breaking out? And then I'd like to use the pre-market high and set an alert. If you have premium, our premium version, they're real easy to go in there and set an alert at the pre-market high. And then if it takes out that pre-market high and it looks very good on the daily, it's got my attention. So I would definitely focus on daily charts to make sure you're not in what I call no man's land, and then look at the pre-market high. And
so you could basically go into the pre-market high, or actually, that's probably not a great example. This would be the pre-market high right here. So here's a stock that's gapping down. You know, you basically could come in and look and see what that pre-market high was. This one had some juice and then kind of gave it back.
Well, yeah, I'm mostly focused on the ones that are gapping up. If I'm going to be looking,
Okay.
you know, for the pre-market, maybe put that CYCC on the one from this morning on. Well, actually, that was a head fake. I'm sorry, CYCC. There you go. That was actually a head fake this morning. But look at that nice little pattern. Once it did finally, it opened up this morning, which is a good reason why I was doing a session when I was talking to this guy, and he was asking me how I trade this, and I said, well, this is a good reason why you sit on your hands the first 15 or 20 minutes, because a lot of people bought that huge wick up this morning on the 5-minute chart. They sat through a lot of pain, got stopped out, but look at it, did a nice little what we call a horseshoe pattern there. Just came down, gave up about half of the gap, and then just horseshoed right back and took off.
Yep.
Yeah.
All right, let me go back to my main screen here. And by the way, while I'm here, just a quick little hack for those that are not aware. You don't have to come to these channels if you want to monitor this thing. We could take this gapper. We could just say, you know what, save this thing, and let's leave this channel. Let's take it back home to our wheelhouse. Load layout, which is my default layout. And then I can find a spot and basically take the up gappers from that channel bar, and there it is right there on the top of my cloud. Up gappers, load it. Now I can do whatever I want with it. I can change the configuration. I can get rid of the company name, which I hate to have. It takes up too much space. So that's something for the new guys. If you haven't seen it yet, you can go to any channel you want, and you can right-click, and you can save to cloud, and you can bring it up. All right, it looks like we got time for one more chart. XRT is the last one in the queue there. Take a look at that.
I don't know why you're far behind. I don't know if it's just me or anybody else noticing that as well, or is it?
That's too bad.
Probably, maybe it's just me.
Okay. XRT. Okay. Let me just see real quick. Yeah, this is an ETF, and it's a retail ETF. You know, it's in a downtrend. It's in a downtrend. draw your imaginary trend line fitting perfectly there, and your imaginary trend line coming down here. It looks like the price is coming down to meet the possible trend line. Now, again, I'm not going to get caught up in the news, but I think we've all heard about a lot of brick and mortars closing. But more importantly, what I care about is how the market is reacting to it. And this one's probably destined to come back down and test these lows. I hate to say it. I'm just not really seeing anything of interest. It's making lower lows and higher lows all the way down. It's probably coming down and destined to want to test this area right down here.
Speaking of which, guys, be sure to catch my webinar on Thursday. I'm going to show you how I use my reverse. I took my pullback above 50 SMA, and I flipped it, and I created it's more of a bounce below 50 SMA, and on yesterday morning, I caught some beautiful trades off of this in the retail sector, and I'll be going over that and how that worked. But yes, a very weak chart. But look at that. It exactly what it did. The sector bound, had a nice bound, ran into its 50-day moving average, and just rolled back over.
Okay. All right. Before I turn it over to Scott, I would just want to address one question. I asked him to send me the cloud link. So, Paul, this is for you. If you send a cloud link so we can take a look at it to see, what you might need or might need to add or take away. The alerting question, just right-click in it. Click Save or Share, but you want to click the Save and Share button. Save and Share will give you this code right here. So all you got to do is copy that code and then drop it into your email, and I can take it from there. So hopefully that helps. All right. Okay, Scott, that's about all we got here. If you want to come back in, I'll put a slide up for you, and you can let them know how to save some money on some discount codes and other stuff like that.
All right, thank you. It sounds good. A couple things going on. We've got a test drive coming up soon. It's actually starting next week, so now's the time to register so you don't miss any of the days. 5 full days of Trade Ideas Premium, and that overlaps that holiday at the end of next week, so you have it from Monday through Monday, so it's a full 5 trading days. And if you register now, you get 2 weekends because you'll get access this Friday after the market to the premium features, so you can start preparing for the week starting the 10th. And it's trade-ideas.com/test drive to go ahead and sign up. And we do charge $8.88, and that covers all your exchange fees and the added support that we take on during these events. It's a small fee for a great experience. You'll have full access to Holly the AI all week long and the following Monday, so for 5 full days. Also, our shareable price alerts, RBI, GBI windows, back testing using the odds maker. We're going to have a special webinar every day in addition to Barry's trading room, just for new people to get advice about from Steve and Jamie and Andy about how to use Trade Ideas to get the best start and ask questions, get all your questions answered, all kinds of fantastic things. So not only those special daily webinars, but special Trade of the Week webinars and office hours webinars, all kinds of good stuff. So don't miss out. Be a participant. Trade-ideas.com/test drive. And also sign up for our podcast. Go ahead and search for Trade Ideas Podcast in any of the podcast apps that you use and subscribe to it. That comes out on Friday, so we should have a new one this Friday shortly after the market closes. So subscribe. You have a fresh podcast Friday afternoon that you can listen to over the weekend and have some great trading ideas formulated for Monday. We have a code you can use today to sign up, and go ahead and use that. Holly all week, all caps. Takes 15% off your first month or year of premium or standard, and this code is going to be no more as of next week. So if you want to use this code, you need to use it before the coming Monday. Just go ahead and note that down. So trade-ideas.com/price. Use that code when you purchase. Both standard and premium include that full hour of training with someone like Steve or Andy or Jamie. So, you can have that peace of mind when you sign up that you're going to get the head start you need. If you have a question, email us, info@trade-ideas.com. Or you can also send an email to Steve directly, steve@trade-ideas.com. Andy is andy@trade-ideas.com. Follow us on Facebook. We're Trade Ideas Pro. If you want to follow us on Twitter, we're @Trade Ideas or @Trade Ideas 1. Steve Gomez is @TodayTrader. And thanks all for joining us. Again, that appropriate place to send any questions is info@trade-ideas.com. So thank you, Steve. Thank you, Andy.
All right. Thanks,
Very
Scott.
good.
Yeah.
Thanks, everybody.
All right.
See
Thanks,
you guys
guys.
later.
See you all in the Q&A webinar tomorrow. Have a good one.